Happy Monday, traders, and welcome to a fresh week in markets. Okay, so last week there really wasn't too much as far as top tier economic data or event risk, but this week there's a lot on. It all kicks off on Tuesday. So Tuesday is August the 12th. August the 12th is the deadline for the US and China trade truce. If that is not extended, then reciprocal tariffs are supposed to go into effect. Both countries have imposed reciprocal tariffs well over 100%. So obviously the market would not want to see that happen. And it does expect that we will get another 90-day delay for China and US to potentially get a trade deal done. But it has not, that delay, 90-day delay that market expects, has not been confirmed by the White House yet, so they've got one full day to do that. But look, we are dealing with Trump. Anything can happen. So it would not surprise if he still maybe did give the delay, but imposed some tariff on China that he just comes up with. Who knows? But the bottom line is the market needs to get some sort of confirmation on this sooner rather than later. Okay, on Tuesday we also have locally here an RBA meeting. Market does expect the RBA to cut rates 25 basis points from 3.85 to 3.6%. The RBA did disappoint at its last meeting. It did not cut rates when it was expected because they wanted to see Q2 inflation numbers and make sure that they were going in the right direction. They were doing that, so it's ticking that box for this RBA cut. But look, the market's actually expecting more than just this one cut. The market is actually looking for another couple of cuts from the RBA and potentially to get the terminal rate down to say 3.1%. So what's going to be important is how the RBA delivers this cut. So Michelle Bullock's press conference after the actual decision is what the market will focus on, and whether or not she delivers a dovish cut, sort of more in line with market expectations that more cuts are coming, or whether or not it is more a hawkish cut that still wants to make sure that everything is moving the way it should. So anyway, Tuesday, yes, locally, if you're trading Aussie, obviously, and ASX, that's going to be important. But the big economic data that market is going to be focused on this week is on Tuesday night, US CPI for July. Now, market does expect the July numbers to marginally go up. So for the headline number, looking for that to go up from 2.7% to 2.8%, and for core, looking for that print to go up from 2.9 to 3%. So look, that is going obviously in the wrong direction. Obviously, they want market wants, and the Fed wants inflation lower, and it is coming before we get really the tariff effects. And the tariff effects we're going to get in September. The first we'll look at that when we get the August inflation numbers. But in any case, we have a market at the moment that is firmly looking for rate cuts by the Fed starting in September on the back of some really poor payroll revisions that we got recently. So certainly the market would not take too well if this number came out above expectations and started to put that rate cut in jeopardy. So look, it is a big deal. Obviously, if these numbers came out for whatever reason below expectations, which is probably the low probability, market would absolutely love that. In any case, look at watch bond yields to see how the market reacts to this. Look, if bond yields go higher, US 2-year yields, 10-year yields, obviously the market doesn't like the print. And obviously, US dollar will be trading higher, risk lower. But if those bond yields stay around current levels or go down, that's obviously the market saying it's okay with the number, and would be risk positive. But Tuesday is definitely going to be the inflation numbers, the biggest market risk for this week. Okay, then moving on to Thursday, we do have some employment numbers out of Australia. They're going to be important. The simple fact is the last numbers that we got out of Australia, the unemployment rate shot up or went up to 4.3%. That is a 4-year high. So obviously, if we continue to see some poor inflation numbers, that is going to cement the market looking for more rate cuts by the RBA, and obviously that can impact on the Aussie. So Thursday, another big day for Aussie traders. And then going into Friday, in the US, we've got US retail sales. They're going to be important for the simple reason is the US is a consumer-led economy. We saw obviously some very poor job numbers, so the market is going to be seeing how those job numbers may have impacted the consumer, and whether or not those retail sales figures start coming lower. So that would be something that not be welcomed by the market, but then it would make the market look for more aggressive Fed rate cuts. So obviously that can be a market moving number on Friday. And then also on Friday we have some geopolitical events in that Trump and Putin are meeting in Alaska. They are going to be obviously talking about trying to end the war in Ukraine. Look, if we get some positive headlines that we're moving towards an agreement of peace, that will impact the market in that obviously sanctions on Russian crude will disappear. We get more Russian crude on the market. That supply obviously is going to decrease crude price, so we'll probably see crude trade down to $60 or lower. Obviously, gold is something that has benefited from the war in that it is a safe haven. There's been a war premium built into the gold price, so potentially, obviously, we'd see gold lower. And obviously, it will be a euro positive thing in that the Europe will welcome peace in the region. So all up, yes, it potentially could be a positive risk-on move for the market, but let's see how that actually plays out. So, look, a lot going on. Market today's opening, risk positive. We saw NASDAQ close at a record high level last Friday. Cryptos had a good weekend. So, opening positive. We do have Japan out for a public holiday in Asia, so it might be a quiet Asian session. But anyway, good luck with navigating this week, and we will check back in with you shortly.